Hello and welcome to the Next 100 Days podcast. My name is Graham Arrowsmith.
And my name's Kevin Appleby. So today, Graham, we're going to be talking foreign exchange, artificial intelligence, and all other things like that. And talking to a gentleman who I'm very envious with at the moment because he's sitting out there in Italy while it's -1 degrees outside my front door in Northumberland.
Yeah, it's the very famous Matt Footner. And Matt, welcome to the Next 100 Days podcast.
Thank you very much, gentlemen. That's a bit of a build-up to say they're very famous.
Yeah. So, Matt, you've developed a way of actually setting up like an artificial intelligent bot. Now, given the kind of person I am, I really have to start with the basics. What is a bot?
And when you say, make sure I cover the fact that when you say you set it up, I haven't set it up. I've got a fantastic team of guys that put the whole thing together and put all the coding together. Bot really, though, is short for robot, and robot is a slave for humans, I suppose.
Oh,
and it's and these days they're all run by AI. So,
yeah.
And really, it's just to take the emotion out of particularly things like trading.
Got you. So basically, then this is a robot that trades, and it's clever enough to know when to trade and when not to trade.
It's clever enough to use the strategies in a particular way that allow us all to make money in the Forex industry.
Right. Okay. But let's just say that Kevin and I rock up and we
Yes.
don't know anything about foreign exchange trading. Where on earth would we start?
Well, I think from that point of view, there's a bigger answer to that, isn't there? It's not a simple question. The bigger the question really is: would you want to do it yourself? Why are you going into it? And are we emotionally enough stable to take the trades on? Now, the reason I started this was because I'm too emotional. I couldn't be a trader. You know, if I see my portfolio dropping a few percent, I panic and sell.
Yeah.
Or do I buy in the dip? Who knows? So using AI takes the emotion out of it.
Yeah. And I've got to say that if I was going into FX, there would be that issue. Plus, I know next to nothing about it, nor do I have the time to study it and find out.
Yeah, correct. And it's one of those things, really. There's 6 trillion of Forex traded a day. $6 trillion
Wow.
a day is traded in currency throughout the world.
Ooh.
The markets are open more or less 7 days a week.
That'll be Joe
20 hours a
Biden, who's got about 5.5 trillion of that. Then I suppose the rest of us are splitting up the rest. But seriously, though, that's a shed load of money.
Yeah, Graham. It's the Saudi Arabian public investment fund that have got all the money in this.
Well, we don't know about that, but the idea of actually there was something behind my question, because basically, I like the idea of passive income, and you almost have to with your website. If people want to know where to find you, is actually tell us, because it's called FX Plus Range. .com.
FXPlusRange.com, yeah.
Where did that idea? I mean, what's the range idea?
Well, we've all got a tolerance to risk, haven't we? Look, I'm 50 years old.
Yeah.
I'm fortunate enough that I had my kids when I was young. And I say that because by the time I was 47, 48, financially, they were off my hands. So if you look at somebody my age normally, of 50, 51, their kids are, I don't know, 14, 15, maybe, and their appetite for risk isn't as high, because they've still got kids at home, they've got university, school fees, whatever they still have to pay for, perhaps. Yeah. I maybe screwed mine up a little bit and had my kids when I was 24 and 25. So didn't have that much money in my 20s and 30s. And then I got easier as I got on with life. I got more spare cash now. So perhaps my appetite for risk is greater.
Yeah.
So when it comes to the FX Plus range, I've got 3 range of funds. One that range is called the 5 plus range and the 25 plus. I perhaps should consult a marketing guy before I put names to them, because it's tied me into something now, really. And perhaps I might need to do a rebrand on the funds. But basically, look, the 5 plus, we're set up for a couple of investment banks in Switzerland. Yeah, Switzerland. And they wanted to get clients' money in, but with a lower risk. And that product tends to gross about 5% a month. And then you move up the scale to 25 plus. And I mean, as of today, that particular fund in verifiable figures, I say verifiable, so you can go online, you can check them. It's not Matt saying these figures. It's at 110% from February the 1st to today, but unverifiable from January to today, it's done 135%. Wow. So that, I mean, from my point of view, that's pretty phenomenal.
It is.
And we haven't had a day where we've lost money from trading. There was a software error that happened across all the broker platforms, Asia broker platforms in March. Software wasn't, trading loss, but it did, did incur a loss, but nothing from third-party software, not from trading.
So if you want to do something in this area, then you need to invest some money to start with. What sort of investment amount are we talking about, Matt?
Yeah, that's right, Kevin. And I'll explain where we come to on that, perhaps. So my background really is financial services, and as financial services guy, your main principle is to protect clients' principal and then get growth. That's where you go in with it. And with the Forex industry, as a past financial advisor, the guys who, or we all do, the guys who make the big money in financial services, the hedge fund guys and the Forex guys. And, if you remember pre-recession, the bonuses these guys were making were phenomenal. And they're making money off money. Yeah. So the reason I went into this, the reason all this came about, and it answers your question, Kevin, from my point of view, and why I've gone in with this line was, look, it's a higher look, to get the higher returns, it comes with a higher risk. Yeah. You can start with, you can go online, you can download a program, you can start trading yourself with as little as $100, but that's fine. But the reason I went into it, anyone who comes into my strategy and into my fund, or the fund that we run, the minimum investment is $10,000 or 10,000 sterling. The reason I went in that way, my 50 years old, I don't want to have as much stress in my life as perhaps we do when we're fighting for our careers to start with and getting up a corporate ladder for whatever that is. So you try and wind down the stress, but there's still an element of stress because you're looking after clients' money. So we get more experience. We realize that if I got clients with a minimum of 10 grand, I'm not going for the guys who perhaps are down to their last $500,000 or 1,000 sterling. I go for people that've got a little bit disposable. They've got a little bit of knowledge of, look, I'll put it in. If I lose it, I lose it. But let's see what the strategy is. Let's see what history is and see there's growth on it. So the short answer is a minimum of $10,000, Kevin, and I'll send you the.
But if you had put £10,000 into your fund, or one of your, I'm not quite sure which range it was, but
the one that you've seen, for example.
Well, if you'd have put £10,000 in on January the 1st this year, 2021,
you'd have more than doubled your money.
You would have more than doubled your money.
Correct.
And that's a little bit each day. Sometimes it's up, sometimes it's down, but over there's a trend that takes you up by, you're doubling. And as you said, you don't often lose on these trades. Is that right?
We've got we haven't lost in a 24-hour period. Correct.
Right. What does that, if you break that down for us, because it almost sounds too good. How would you not lose on some occasions? Is it because you've got, you're obviously clearly capable, but what would stop you from losing?
We do these things called micro trades. So we don't go for the big lot. So, you can take on a trader and you give them 10 grand and they'll invest a bunch of it. It's called lot sizes. So if you look at ours, we do hundreds and hundreds and hundreds. I think we've done, I want to say 200,000 trades this year. Wow. But these are trades that start off 0.01 cent or 0.01p. And then it's leveraged up to a certain extent. So look, yeah, absolutely. If you look on the verifiable page, and you can see all our trading history. We don't hide anything, and that way nothing can bite me in the bum. You didn't tell me this, Matthew. So you can see all our trades, and we have I was looking at it recently. I think it's last night. It's a 72%. 72%. I think 72% win on long trades and 80% win on short trades. That really means the length of the trade that's open. So yeah, overall, as percentage-wise, the fact some days you'll make $1, some days you'll make $100.
So just let me try and understand a little bit about long and short trades. It sounds like long and short COVID, doesn't it? Really, I suppose. But there's one that I prefer, which is your version. But basically, does that mean to say that you're betting that the pound sterling, which is currently, I don't know, 135 to the dollar or whatever, is going to appreciate or depreciate over the next 3 seconds or the next 3 weeks? How do you determine that? What is it that you're trying to do to outsmart what actually happens?
So just give me a quick 1 minute education, I guess, on the Forex market. Do you guys know what the Fibonacci curve is?
I think I've heard of it. Yes,
it's a thing in nature.
Yes,
it's a matter of spirals. Okay.
Yeah, it defines my face apparently, because I'm one of the good-looking people. So I understand that.
And I always thought you had a face for radio.
Bald people, Graham, bald people, very good looking. So the way the Forex market works, bizarrely, it's based on human emotion, and it's all based on human emotion, whether things go up or down. Now there will be people that watch this that will disagree. The fundamentals of any market are human emotion. You think about it. Back in March last year, in fact, let's go back a bit further. January last year, just as COVID was starting to bite, the Dow Jones went down to it was about 29,000. Right. Then it started to bite, and the Dow Jones went down to 27,000. Okay, within 3 months or 4 months after that, it was still back up to 29,000, and it's now above 35,000. Now, does that mean that earnings are higher than they were? Maybe, maybe not. We're buying more stuff, perhaps. But what's that based on? It's based on pure speculation. You look at Tesla shares. What are those trading at? Is it 150 times earnings at the moment, whereas Ford trade at 8 times earning? So what's that based on? It's pure speculation, really.
Yes.
So when it comes to Forex, it's a microcosm. It's milliseconds. It's trading on 5 decimal places. So, for example, the euro dollar maybe at the moment 113, 116. Now we trade. It's called we trade to the 5th decimal point.
Right.
So, and sometimes the 4th decimal point. We'll put, for example, if it is 113, 111, for example, and there'll be traders around the world that think, right, we think it's going to go up to 113. So they'll put a load of buy orders in.
Right.
Now, if it doesn't come up to 130, if it starts going the other way, they'll put a load more buy orders in because they're buying it cheaper. So then the way our system works, it looks at the cycle. If you think of it as a seesaw, if there are enough people thinking it's going to change for the seesaw to turn, for the market to go back up.
Got you.
And because we're dealing in fractions of cents, fractions of pence, then you need people to weight it. So you need people in London, New York, Asia to think, yeah, it's going to go up. And then it'll start tipping. Now, other times it doesn't. People think, no, it's not going to. So then it'll drop, and it'll drop further. The dollar will strengthen against a currency, and the euro's dropping and dropping and dropping. So then our product will look at it and think, right, it's dropped enough. Let's put some more buy orders in, or it's not going to drop. Let's put some sell orders in because it's going to go down. Now, what's that based on? What's ours based on? Ours is based on human emotion. We know that there's these traders around the world trading trillions and trillions and trillions by the second, phenomenal, or billions and billions by the seconds. That adds up to trillions and trillions by the 24 hours. So if we know that a guy's thinking, right, I know it's going to change now. So then that's when ours comes in. It'll start clicking out the orders, taking profit, and cashing in the profit. Now, these guys, they'll say, right, it's based on analysis of the markets. Well, look, of course that's true. And you look at, so what happened, I think it was Monday, Tuesday this week. There was sudden volatility in the markets. The dollar strengthened against everything. The guys were, people around the world were throwing their money all of a sudden into the safe haven currencies, dollar, sterling, and yen. Yeah. The reason was, for a second, on one of the news channels said that Pfizer and Moderna have reported that their vaccine probably doesn't protect against the variant. Well, so immediate panic for that second. The markets go through the roof, or the dollar goes, metaphorically speaking, through the roof against the euro, which we were trading. And our system, our AI is buy. And then later on that day, later in 10 hours, another news report comes out and goes, oh no, we think it might be okay. Sell. What's that based on? It's based on human emotion reading something into the analysis report of some quant guy or a bunch of quant guys somewhere in the world.
So they made a judgment call about what's going to happen to stocks in certain geographies, and then said, okay, well that will impact the amount of foreign exchange moving towards that or moving away from that economy.
Well, it'll affect what's happening with the dollar. They're panicking, thinking there'll be somebody panicking probably, thinking, right, we're going to go back to March last year where the Dow Jones tanked, but at least the dollar, the dollar is still perceived as a safe haven currency.
Yeah.
I think Biden was it August the 8th where they passed the 1 trillion stimulation bill.
Yeah.
Well, again, it just shows that the dollar is a safe haven currency. Whatever happens, they're still okay to raise the debt ceiling.
Yeah, well, that's another engaging conversation, which I'm sure our views might diverge on that. However,
what it allows it allows volatility, and where we make our money, we need really, really good news, and we need really, really bad news. So last year, with Trump we had a tremendous time. Every time he sends out a tweet, the markets are all over the place. So we're able to put a load of buys or a load of sell orders in. Right. It's phenomenal. And at the moment, Biden came in, and for the rest of the world, it's great because he calmed everything down.
Yeah.
He built bridges again with Europe, but we haven't had as many volatile days.
That's a bit of a shock, really, isn't it? So really what you're saying is that you would prefer Trump back in office. So from
an economic point of view, from a selfish point of view for my clients, absolutely.
Yeah, So volatility then increases the likelihood of the AI system that your talented colleagues have built for you and for your clients to actually benefit, because it's moving quicker than a human can do.
Moving quicker than a human anyway, and there's more volatility. There's more chances to make money. If it just hovers around 113, 111, we needed to go 112, 113, 114, 112, 113, 112, and then down a bit and up a bit. Last week it dropped 200. It dropped from 113 to 112.
But you were saying, is it the fourth or fifth decimal point? So it's
fifth decimal point, yeah.
If you're getting euros now, it's, I don't know, 1.13, and then the rest of the numbers, something like that.
Yeah, let me tell you what it is at the moment, just to give you some 336. Half an hour ago was 113, 322.
322, right? Okay. So it went a little bit weird just before you said that. So are you saying that in the last day or so that's changed materially?
It's not really. No, it's still, if you went on holiday, you wouldn't notice any difference between buying a euro today as you would last week. Yeah. But this year, the euro to dollar has gone from a high of 126 or 123 to a low of 111 a couple of weeks ago.
Got you.
So, we've had a steady decline as the dollar's strengthened.
Okay, so when what is it? Because I've seen some comments that you've made because you've got some fantastic publicity. You're still with us, right? Okay, so in 3, 2, 1, Kevin, there's a bit of editing for you here. You've got some fantastic publicity, and one of the things I noticed in the New York Finance website, that one of the comments that you made was how important it is for the everyman. You're not just about helping those guys on, massive bonuses and so forth. This is for the regular guy. And the regular guy, in your case, what you said earlier was the idea that, you put in your 10,000 and then, that eliminates the guys who potentially if you lost 10,000, for some people that would really wipe them out. But for the guys who are going to put in 10,000, most of them, they're going to be good to go. That, if it all went the following day, it'd be a bit of an annoyance, but it wouldn't put them under. Is that your understanding?
Yeah. And there's good reason for that. Partly, I'm not involved in the high net worth individuals or the ultra high net worth guys until I met you two, obviously.
Yeah.
But so as a financial advisor, you know, and I'm sure you both got one. I'm sure you both sat down with them and they've gone through how much will you need to live off when you reach retirement age, right? This is how much you'll have in the bank. As a financial advisor, if somebody wants to live off 60 grand a year, so $5 grand a month, we said you'd need to have 1.2 million in the bank.
Yeah.
1.2 million in the bank because you put it into, I don't know, government bond, for example, get 5% a year. So 5% of 1.2 million is 60 grand, so $5 grand a month. Well, I mean, 1.2 million now is still an awful lot of cash, isn't it?
Mm-hmm. Yeah.
You know, 10 years ago, 20 years ago, when as financial advisor, we're still using the same matrix. Well, putting this together has thrown the last 15 years of financial advising for me on its head a little bit. Because, you know, I've got guys now who have got less than 100 grand in, but it's still netting after fees more than $5 grand a month. So does that really mean that you need to have 1.2 million saved up? I don't think it does.
No.
You know, and putting this together and sending it out to the everyman. And I say that because the reason it came about was because my wife wanted to give up her job, and she didn't really want to lose her income. She was only, she was earning 3.5 grand a month. We were living in Tokyo, so 3.5 grand a month in Tokyo isn't that much, really. You can imagine comparatively.
Yeah.
But you know, we put it together. She stuck 12.5 grand into an individual bot, our very first one that I got coded, and I think she still probably takes out 3.5 grand a month from it now.
Wow.
If she was listening, she would probably say, "No, I don't." But you know.
So she knows that you're just an inveterate liar. Then, what you should just make that up. I mean, but she knows you best.
Anyway, I'm a husband. Of course, I'll be back by 10 o'clock, darling.
No. But you are right. You know, it's if you can actually make something approximating $5 grand a month, you're doing all right. Then you're probably twice maybe even more than twice the average wage.
I think so, yeah.
When the takeout wage, how much of that $5 grand coming from this type of investment would be subject to capital gains? All of it?
Well, look, I think let me caveat that by saying I'm not a tax advisor. No. I don't live in the UK. I live over here. I'm very fortunate on the visa I have. So I'm on a thing called elective visa in Italy. And the elective visa means I don't need to pay tax because I can't earn any money from inside. I can't earn any money from it, from living in Italy, from working in Italy, sorry.
Yeah.
Now, so in the UK, so what my clients have said is that some clients said, look, we think we're subject to capital gains tax. Pay capital gains tax then, as you would do with your normal stock investments. However, there's a couple of accountants that are getting opinion on it that they think it perhaps could be similar to spread betting. I don't think it can because they're the class of CFDs. Don't ask me what CFD.
Yeah, no, I understand.
I think off the top of my head, the acronym CFD stands for. So I don't know the right answer because I'm not UK based guy.
Okay, all right, but let's go back into this idea of this artificial intelligence. Now, you said that your clever colleagues or people that you know
Genius
helped
colleagues,
you build.
correct.
When I invest, say, 10 grand, do I get my own bot, or is it just the sort of? That's just a way of putting it.
Let's talk about that then. So when I started, I got one individual bot put together.
Right.
So I went to a load of guys. I went to a load of coders who are in the Forex world. They said, "Look, Matt," said, "you don't want to, my underlying thing is protect the client's principle, protect my wife's principle."
Yes.
Protect my wife's principles. Protect my wife's
principle. Yep.
Principle.
No. Yep.
And all the guys saying, "Look, you can get 50, 100% returns a month." Okay, well, what's the risk on that? Oh yeah, you could lose the whole lot like that. What? I don't want that. So then I found the guys who are now my business partner and the team to work with. They said, "Look, let's lower it down the strategy. Let's come down the level. Let's come down the risk level. Let's not put a million trades on, every day. Or let's not, trade every minute. Let's trade lower down with lower lots, etc."
Yeah, I see.
So I gave them the strategy based on human emotion. based on knowing it's the human emotion that trades, that decides how the markets go up and down. And so we got one individual bot. And so my wife's a separate 12 and a half grand, and she was taking about $3,000 a month out of it. So it's doing an average. The individual bots are doing an average of 20 to 30% a month.
Wow.
And I started selling, well, I started telling my friends, they started buying them off me, then I started selling them. By this time, we were in some draconian lockdown in Tokyo. We were allowed out for an hour a day. I've got a lot of energy, and my wife didn't want me, just, hey, darling, how you doing? And wants to talk to her all day. So I built this business up from the kitchen table in Tokyo. Yeah. And I started selling them via Facebook, actually.
Yeah.
And that's how I started building it. So these were the individual bots. However, they worked really well with between 10 and 20 grand in. And after that, they slowed down a bit. But because there's only 10 or 20 grand, there's quite a small margin for fail. So right. when in November with the election campaign, the margin went right down, and a couple of the bots lost 30, 40, 50% of their capital.
Right.
And at the same time, a company came to me and said, look, we've seen your product, we can regulate it, and you could now make it into a fund, which is a financial advisor appealed to me. It's a fund, a regulated fund. Yeah. And from a stress point of view, I wouldn't be getting all the messages, what's happening with my bot? Am I going to lose all my money? I wouldn't have to deal with that. So now putting the fund together, I've got 15 million under management now, spread across 15 bots. Because now we've got 1 million in each one, thereabouts.
Yes.
So the margin for fail is so much greater.
Yeah. But
the returns aren't as great. And I equivalent to having, a Ferrari that goes 1 million miles an hour but can break down. Yeah. Not all Ferraris break down. Or a beautiful Rolls Royce that is just serene and coasts through the countryside and down the motorway, doesn't cause any drama, gets you there in a comfortable way. So look, if you're your own individual bot, I get 20, 25% a month thereabouts, but with the risk of losing everything like that, or a high percentage of it like that, or just put your money in the fund, sit back. And
so actually then, if I was to put 10,000 into this, that would go into the fund.
I would persuade you to put it into the fund because there's less stress for me.
Both of us. Yeah. Well, for you in particular, and of course that's uppermost in my thinking when I'm putting 10,000 into your fund.
Well, yeah.
I don't want you to be. I don't want you to be stressed by it, Matt.
I want an easy life now, Graham. I want to sit back and relax a bit.
I do. To be honest with you, it's very attractive because neither of us want stress. I'm a bit older than you, and basically, you don't want stress at the end of the day. And unfortunately, I came a cropper with spread trading with somebody who basically walked off with the money, and basically, so I'd be quite conscious of bad money after good money after bad. So basically, the issue that I would have is, okay, the money's not. The money can be sent, but can I kind of not guarantee, but is it sort of an expectation that, the sort of $5,000 a month or whatever would be there with a reasonable investment?
Yeah. So look, so just again, let's just cover a couple of parts off. So I've used the word regulated quite a lot.
Yes.
I do that on purpose. It's a regulated product. What does that actually mean to you? And I, it's a financial advisor. I've always said, look, regulation is there to protect me more than you. It's to make sure I do my job properly. Now, to the detriment of you, because it probably reduces your returns.
Yeah, right.
Now, from this point of view, what does regulation mean? Well, it means that I can't touch your money. It means the broker can't touch your money. It means the only person who decides is you. So you transfer your money from your Barclays account to your broker account, and then you press the button to transfer it into the fund. At the beginning of each month, then you press the button and you can take out all your money, just your profit, or just let it compound.
Yeah.
So from that point of view, that's what
yes,
the regulation is there. Now, is there a guarantee? God, no, absolutely not.
There can't be a guarantee. But the profits that you've had this year as an indication. Yeah. And would you characterize this year as being? I think earlier you said that the level of volatility has not been quite as exciting as last year.
Last year we would have finished on over 300% for the fund. For the fund, if we'd been running the fund all year last year with back testing, etc. This year, from verifiable figures from February to December, I think if you look on the verifiable figures, I'd say 120% by the end of December. Which it's okay, and That's gross. There's fees to come out of that, but it's still, you can work the fees out.
And how do you mind me asking how important world events are relative to because if it was last year, and I know we had the impact of COVID coming along, the impact of the US elections, etc., and a few other things, but Brexit talks and all the rest of that. There's a bunch of stuff that were upsetting people. 2022 could be up to a point similar. Certainly this time next year, it's certainly in America. It could be quite a similar set of circumstances. So, would you instinctively think it's going to be more like 2020 next year than 2021?
No. So let's talk about 2021 then. Let's think of the headlines that we've had. And as I get older, my memory's not as good, but I can think of the spikes in our fund. We've had the Evergrande when the Suez Canal got blocked off.
Right.
So that was a great period for us.
Yeah.
The $1 trillion stimulation bill, great period for us. The inauguration, before the inauguration, when was the riots? About January the 6th or something, or were they at the end of? Anyway, the riots were a great period for us.
Right.
Recently, what's the big property company in China that was on the point of going bust and still might?
Yeah, I can't remember the name, but yeah.
Big headline figures like that.
Yes.
Great period for us. Talking about regulating cryptocurrency, great period for us because all the cryptos plummet. So which obviously means fiat currency is going to, so any major headlines where anything actually happens is great. Speculatory headlines aren't as great. But if traders just read the Daily Mail, who are causing the Forex markets to move, it would be fantastic.
Yeah. I suppose they're stuck into their Financial Times and a little bit more sort of somber. But I get that. So basically, the volatility is good news for FX trading.
Yeah.
But only, I guess, if your bots, if you like.
For our strategy, yeah.
Now, and that's. Forgive me for asking such a dumb question because I'm always a little bit behind. I'm always a page or two behind most people, but try and catch up with a few questions. One of the things that's on my mind is if you've made a penny, someone else has lost a penny. Is that how it works?
No, this question was asked to me last night. Only last night.
No, I didn't. I've just asked it now. I didn't ask it last night. You're making it.
No. Somebody else asked it last night. It's the first time I've had this.
All right.
If somebody else, if you're winning, well, who's losing? Graham, I don't know the answer. And that's what I said to the guy last night. If you look at our trades and out of the, let's say 100,000 trades in the last X amount of ones.
Yeah.
Well, we've won 70 of them, so we've lost 30 of them. We've won 70,000 trades, which means we've lost 30,000 trades. Overall, we're winning. And if you're manually trading, if you go on the courses, I heard the stat recently, it's a famous stat throughout trading and doesn't need to be just in Forex, that there's a 90-90-90 rule. 90% of people lose 90% of their money within 90 days of trading. Again, so the reason I put this together was using AI, it takes the emotion out of it. It just takes the emotion. If I have my own financial advisor, I'm a terrible financial advisor for myself. I feel I was a great financial advisor for my clients, but I'm too emotional when it comes to my own money.
Your own money.
Where would I put a stop loss in? Where, would I put it in my money drops 10%, 7%, 20%? When emotionally, well, I should be buying when that's there, but it doesn't,
So the strategy, the code that's in the robot, in the bot, the code that you've written, what's the right word? That takes out the emotion, de-emotionalizes the decision. But it's the smartest possible decision that you can take given the circumstances you're dealing with.
Yes.
But
Absolutely.
Bear in mind also I was quite attracted to the idea that you're dealing with the fourth and fifth decimal point of a currency. So another currency question: which currencies do you trade the most?
We generally now only trade euro dollar. And the reason is it offers the most stability. Plus, if you ever listen to these programs, you'll hear this thing called slippage, where you pick it up on things like, I don't know if you ever watched Billions or probably that film, something on Wall Street.
Right.
Anyway, and all that. And it's when you put an order in to set, you put a sell order in, and there's not enough, there's no one buying it.
Right.
Now, because euro dollar are the biggest currencies, because we're trading so many, we need to make sure when we put it in, someone is going to buy it at that order value.
Right.
Because that's what our calculations, that's what the algorithm has tuned to make sure the percentages hit right. Because I very, very rarely personally trade, but I did recently. I lost a chunk of cash, but I was doing gold dollar and I needed gold to be sold for 118,002 and I made $1,000. There wasn't enough liquidity in the market. There wasn't anyone out there that would buy it at that split second at 118,002. And I went from $1,000 profit to 200 profit in the blink of an eye.
Right.
So because we're doing so many trades, we have so many sell orders out there.
Yeah.
We need, we trade the most popular currency,
which is
enough liquidity to buy it.
Which is why your 10,000 goes into $1 million fund, because you can have that many trades. Is that just supportive of what you're doing?
Yeah, I suppose to a certain extent. It's more though for comfort on that point of view, keeping the margin high,
right?
Making sure there's enough cushion in case the markets still do come down. You can imagine it's. Sorry, go on.
No, I was just going to invite Kevin because he's looking very serious on this. He's getting his checkbook out.
I'm looking very serious on this, Graham. I'm sitting here thinking this in a way feels too good to be true.
Let's cover that point actually, Kevin. Can we let's cover that point now, because so Graham, or I think Graham's actually been online and seen some PR that I've had done and PR that's been picked up on me and stuff. When I started this, as a financial advisor, or no, not just financial advisor, as any industry when you're dealing with clients, there's always people out there who'll give you a kick. And there'll always be people there who'll put stuff on Google and write, as you said, rightly said, it's too good to be true. And then the next line on from that, for the uneducated or the people who can't be bothered, if it's too good to be true, what's the next line on from there? It must be a scam.
Must be a scam, exactly. Yeah.
Right. Now, the fact is,
I've seen the various scams that have been investigated on telly where apparently folk are making a lot of money to start off with. Yeah. They get really confident in it and then all the money disappears.
Right. And they're unregulated products, but it doesn't matter. We all, particularly the financial industry, we're all tarred with the same brush during the financial crisis. I'm a financial advisor, getting people to put their money into cash, but I'm tarred with the same brush that the bankers are being tarred with. You're a bunch of whatever.
Yeah.
So with this, and I'm aware of that, and I started this because it was fun, and it still is great fun, and I don't advertise it. This week is the first time I've started putting myself out there to more. This is an advert really. In fact, Graham knows because that's how Graham and I started talking.
Yeah.
To start advertising the product. Now, I can do that now because I've got 300 clients. 95% of the 300 clients came through referral. So 95 of my clients already have come via referral, which is, I think, phenomenal because the way it started. So, with Graham, if you bought a bot originally off, or this is for the fun, if you bought a bot originally from me via Facebook, and then and you'd seen you doing 25% a month, you'd be telling Kevin, we can't help it.
No, of course not.
And because Kevin knows you, and he knows that you're not,
making it up.
Yeah, making it up. Look, here's my bot. Look, I put this money in. Kevin might be skeptical about it. He might say that's too good to be true, and he'll say, look, I'll see what's it like in 6 months' time, and then in 6 months' time he'll say, you probably lost your money now. Say, no, I've been able to put money in, take money out, press buttons. It's fantastic, and Matthew's giving me great service. So I've got all these people, and so the whole thing snowballs. And when I put the fund together, people in the bot, people with their bots, they all stuck some money in the fund to get me going. So I started off with 90,000 in the fund on January the 6th this year, in the fund itself. And then by the end of the month, we were up to $250,000, and now we're up to 15 million. But it was all on referral because people were able to say, I'm in it, and you can't help talking about it. And their friends will say, it's too good to be true, but it's coming from you. So maybe it's not. And that's how it's happened. So it's only now. And so I didn't want to advertise it because I didn't want people to say, what, you're netting me 8% a month? That has got to be a scam, And I still have it. I've still got people online who are happy to put rubbish you want, even in the product.
It's the thing is, it's not that high a bar that you can't just test this, and there'll be people out there thinking, it's probably worth the shot. Now, how much security can I have in terms of the money? So basically, I put the money in, and after say 3 months, you've given me a return of, I don't know, 30% or something like that. I say, thanks, Matt. That's all I wanted. Out I go.
Yep.
How does that work?
The sale here, and then you're right, Graham. Here's my sales pitch when I'm talking. So if you're in it and you recommend Kevin, and Kevin speaks to me, say, Kevin, look, here, I'm unsure about it, Matt. What do you recommend? And say, look, stick 10 grand in the beginning of the month. At the end of the month, take it out. If you're not happy with it, take it out, and you'd have made 5 or 6% net fees. And so you're in control. You press the button, the money transfers to your account, your broker account. At the beginning of the month, I've kept it liquid because it keeps it enjoyable. One of the reasons why people hate financial advisors. You've tied my pension up for 25 years. With this, let's keep it liquid as much as we can. So at the beginning of each month, the fees went out yesterday, and people are moving their money around yesterday and today. Just take your money out. It's as simple as that. Literally, you click withdrawal, and your money goes back to whichever bank account you verified.
And how? I'm sure people have made losses, but if you've got, I think you've said you're up to about 300, but let's just say, call it 100. Out of 100 clients, roughly, how many have kind of come on the wrong side of good, if you like? How many have walked away with wounds?
0.
Wow.
0. And in fact, it's better than that. It's better than that. I've only had one client. So it's obviously something bad coming because he's hesitating. How much time have you guys allowed?
No, please give us your answer, because we're really
all right. So look, my whole thing's about customer service, right? It's about client service, and I know what clients want. Okay, all we want an easy life, stress-free, and not to worry as much as anything, because we've got other things in our life to worry about.
Yeah,
okay.
That's right.
If I give you 10 grand, Matt, just put it in there, let it do its thing. I don't want to worry. If somebody wants to WhatsApp me, everyone has got my WhatsApp, my Telegram, and if they want to call me, they can call me. So if they message me, I get back. If my phone's on and it's not middle of the night, I'll get back to them straight away. If they want a piece of paperwork, I've got a PA who's very, very good. Forward it to her, she does it. If they're trying to speak to the broker and the broker's not answering their call because my broker's in Australia and things like that, then they message me and I get it sorted out. If it's going to take longer than 24 hours, I tell them. Now, I say that because I touched on what happened in March. So in January when we started, we did, I want to say, let's say 26%. It may be 22, it may be 28, but let's say 26. In February, it did 22%. So everything was going great guns. And by mid-February, had about half a million in the fund. And then on March the 8th, March the 8th, we had $1 million. We were trading $1 million. We had $1 million in the fund. So it's gone from 90 grand to $1 million in 6 to 7 weeks.
Wow.
And there was that software glitch. So in Forex, uses MetaQuotes and MT4. One of them sent out an update to the other one, and it didn't sync. It didn't pick up. Now, it's okay if you're only doing 3 or 4 trades an hour or a day, but we're doing, at the time, of $1 million, we had over $1 million. We had 300 grand's worth of open trades that got wiped out right in front of my eyes through a software error, through a software error, third-party software. Okay, wow. It got wiped out. I'm only just starting this fund. In my mind, that's it. I'm wiped out. My business is wiped out. I've lost 30% of clients' money like that, or the system. And it wasn't to do with our software. It wasn't to do with our algorithm per se, but the fact we had so many trades out there. Let's say 5 to 10,000 trades at that time. When they synced, so MT4 is syncing with MetaQuotes, right? They've got these trades. So when our sell orders went in or our buy orders went in, they didn't sync.
Yeah.
And if we had 4 trades, it wouldn't have mattered because we're trading so many times a minute.
Yeah.
And so we lost 300 grand of clients' money, or 300 grand worth of clients' money went like that. Now, I've got to confront the problem. I could have hid under the duvet, not answered my phone, my business be wiped up. It's okay because I can get a job again. I'm a qualified advisor, so I could go back out there. But you're responsible for clients' money and you and I know to earn 10,000 spare cash, it's not easy, to get that 10 grand and then to trust Matthew, who I don't know. I know him through a friend of a friend with that cash. I trust him. Well, now Kevin, if it was Kevin, he would come to you and say, Graham, and you'd be, it's human nature to blame the messenger.
Yeah, absolutely. I really would not be very pleased with Mr. Arrowsmith if I just lost 3 grand of the 10 grand.
And it's right, Kevin. You would inadvertently blame Graham, although it's not Graham's fault. I mean, inadvertently, Graham would feel the responsibility and feel embarrassed. Now, if I know that as human nature, if I know that, then I've got to first of all protect Graham, and I've got to make sure that Kevin shifts it onto his frustration onto me. But I've got to come to you guys with a solution. That's what I've got to come to it. Okay. So what I did straight away, I messaged everyone, said, look, this has happened. At the time, we didn't know what caused it. The broker didn't know what caused it either. And to be fair, we got a very good broker. I got a very, very good account manager. And he was on the phone to me straight away. He said, look, I've seen what's happened. I'll get onto our tech and find out. So I kept in touch with everyone. I had everyone in the group at the time, messaged them, said, right, this has happened. I'm on it. We've stopped all trades. Give me an hour and I'll come back to you. Okay, so we found out what happened. So then I had to go back to everyone. I'm getting stressed now thinking about it. Went back to everyone and said, right, I'll have a solution for you. This is on the Monday. I'll have a solution for you by Friday. And I worked with the broker and said, right, what are we going to do? And we came to an agreement that me and the broker would put 300 grand of clients' money back into their accounts. It was 6 months. Now, it wasn't absolutely ideal. Absolutely, it wasn't ideal. But the fact is that we kept in touch with them. I'd kept in touch with them as best as I could. There were people obviously stressed, but we know they're stressed. It's your freaking money. It's your hard-earned cash. And what I've always said about cash when it comes to financial services, it's like looking after someone's kids. The emotion that comes with money, it brings down government. It causes wars. It causes world wars. It brings down sovereign states.
So can I cut to the end of the story? You effectively committed to putting the money in.
Yeah. So over the course,
but
of the
actually,
next
your service did that for you, didn't it?
Correct. It was the customer service provided on it. So when you say so your initial question was how many people have left you losing money? Now over that period, not one client left me.
Wow.
And that's a testament to human nature, not about ourselves. It's a testament to human nature that, you know what, we've already trusted you, Matt. You've shown what you can do. Let's see if the next stage is good enough.
Yes.
So
they trusted you, and part of the trust is that you, in a really troublesome period, 30% wipeout, overnight sort of thing, you came good. It was horrible for everybody, but at the end of the day, and what you told us earlier, Matt, was that your service, beginning of the year to almost at the end of this year, 100% up.
100% up, yeah. And during that period, there's only one client that's left me. She's called Leslie, absolutely lovely lady. And she said, I need to take all my money out. It was back in August. What do I do? Told her what to do. I didn't want to ask why she's taking it out. Because if you're asking, it's not my business.
There's a thousand reasons why that could happen. It's nothing.
And I didn't want to hear an excuse. If I had done something wrong, I didn't want to hear human nature again, make something up to make me feel better. Anyway, she messaged me last month to say, I'd sent her a message saying you left 500 quid in. And she goes, oh yeah, so I'm putting the rest back in there now. I said, okay. I said, do you mind me asking why you took the money out? She goes, I was buying another property. There we go. No. So that one person that has left is now putting money back in. So look, the genius to my business are my guys who have got all the coding. Yeah. When you go online and Kevin's touched on it. Yeah, I put my money in. I've seen these things that work for a few months and then they deteriorate. There's loads of that online. Great having AI, great having a bot, but after 4 months it's a bit crap. And the reason I'm using words that the coders have told me is the code deteriorates. Now we've got a team of guys and they maintain it. They might be in every day. They might be in it every week, every weekend or during the week, just to make sure the coding is still where it needs to be doing. Yeah. Because you can't just leave it. You're looking after clients' money. Yeah. And it's the confidence that we have to give to clients, but not false confidence. This is what we're doing. So if somebody's enthused and actually we've let you talk because usually we'd have interrupted you, but I think you were making such a lot of sense, and
I'm quite enthused for people to do this because, frankly, inflation is a fact of life now. I mean, I think what's happened in America and what's happened over here because of COVID, we've pump primed. They've done it that much more in America, and they're going to do a hell of a lot more, and it will lead to more inflation. And I think, if you're on a relatively fixed income, or basically you're on, you might be getting a 3 or 4% increase from your company or whatever else like that, or you afford yourself that from your own company. Well, inflation might wipe all of that out. So if you've got another source of passive income, which is just because effectively, if you've got more than 10,000, you don't really, and you got that in other funds which are giving you, less than 10% growth, then why wouldn't you at least consider the opportunity of getting more than 10%? Let's just say somewhere between 10 and 50, I would be very happy with. If it was 100, delirious. And then of course, what that means is that, well, I put in 10 and I can afford to put another bit in. So you inevitably, I would imagine that you find that, the first 10 is followed by more.
Yeah, absolutely. Yeah. Yeah. And you look at that, where would you put, where would we as retail investors, where are we told to put our money these days? In the UK, ISAs are still a thing, are they, in the UK?
Well, they are, and they're offering the same level of spectacularly average returns that they've always done. What we should be looking at is part of our portfolio should always be in slightly more but I'm not an advisor, but I would suggest that it's not the worst thing in the world to have a bit more speculation with part of your portfolio if you can afford to lose that. But if you can, because if that then goes the way in which you are offering your clients money, then you're ahead. So from my point of view, it's you're worth. I wanted you on here because A, I liked you, but B, I think the opportunity is there for people. Kevin?
Absolutely. And I think I totally agree with that. And moving sums of money around that my elderly mother has been relying on to live on for years, those sums of money are making near enough zero return these days, Graham. Yeah. So I think you've got to take a different view on things if you're going to retire and survive for the longer period that we're all likely to live these days.
Well, if you're on a limited, if your income's dropping and you wanted that foreign holiday, you wanted to go to the, to on holiday near where Matt lives, but you might be careful about that. He'll be out there with his begging bowl. But basically, no, actually where you live is absolutely gorgeous. But and who wouldn't want to go to the, the Amalfi Coast or whatever in Italy? And it's a beautiful place. But if your finances are being cramped from things like inflation, which has a real debilitating effect on income, then we owe it to our listeners to give them an at least the point of view from yourself, Matt, and the companies like yours. Because yes, as Kevin said, people might think of this as being, is it really for me? But the truth is, in the pudding, you've not lost any clients, and you've delivered them anywhere up to 100% of their investment. That's a pretty good outcome.
Don't you think that so Kevin was talking about his mum. It's not his mum's fault, because she wasn't around before the internet.
No.
So that's that generation. Then we're a similar generation, really.
Sure.
I would say. So
well, you're younger than us, Matt.
Okay. So particularly my generation, then even more so than you. Why are we still reluctant to change? Why are we still investing everything in property? It's education, isn't it? And there's nothing. I'm sure there's nothing wrong with property. But talking to somebody recently, they've got a property ISA portfolio, returns 8% a year. Well, and she said, she's just upped her investment to 400 grand in the fund, because she's now educating herself. So my kids are 25 and 26, and you hope they are being educated, but they're being educated by me, which is really, I've only now gone into the mindset of, right, look, Matt, things are changing. I use TransferWise now. I sent a rant to Lloyds Bank. TransferWise, as you know, you send money, it's instant. It is instant.
Yeah.
With Lloyds and the legacy banks, they still take 3 days to muck around with your money. Those 3 days, they're making money on the Forex markets, incidentally.
Yeah.
And then they're putting it back into your bank.
Yeah.
So the technology is there now. So it's only now that I've had, or the last 3 years, I've had to give myself a kick and say, stop being a dinosaur and learn about it, and learn what's available, and then use the tools that are available. So now my kids' generation, unfortunately, being educated by my generation, who are the beginning of the internet. So hopefully their kids will be heavily into, and I'm an advocate for crypto. It needs to be regulated probably, but they understand digital currency. They understand, the pound, a £10 is meant to be tied to gold. It's £10 worth of gold. Cryptocurrency, well, it's not tied to anything. Well, it's tied to people's acceptance of it.
I think this has been one of those, we could talk for the rest of the day and still be enthralled by what you've been saying, Matt. And if somebody wanted to get in touch with you about investing with you, where do they go?
If you click on the website www.fxplusrange.com, my email address is on that, and my WhatsApp number is on there as well. So either drop me an email, or you can give me a call or send me a WhatsApp, and I'd be more than happy to.
Yeah, you're a nice bloke. You live in Italy, so you're too far for us to come round with a big stick. But the nice thing is that it offers a real opportunity to do well with this, and all the things that you've done is you split up the opportunity into something that's sort of digestible. And I'm certainly looking at this. So basically, Matt, thank you very much indeed for being on the next 100 Days podcast.
Thanks ever so much for your time.
Great. That's potentially very interesting. Huge rate of return available, and there's got to be risk in there. There's got to be a lot of risk in there. But up to now, as Matt says, nobody's lost anything. Well, that doesn't continue forever. But if you do want something in a small amount of your portfolio in the next 100 days, then that's worth thinking about.
Yeah, the fear is probably one of your worst enemies when it comes to investing. And you have to be a little bit brave, a little bit, being willing to go on that roller coaster, because at the end of the day, if you went to Matt's product and you ended up with 100% return, 100% return and more, he said the previous year, if you modeled it backwards, it would have been 300%. I mean, if you get that kind of return, it's sort of life changing. So, and it is passive income. So you're earning if you've got a job or you got a business, that money's coming in anyway. So this is stuff that's going on in the background, like all investments are going on in the background. And if it means that you've got that much more money to spend, either month after month after month, or you compounding it, and then you've got a big chunk of money for the round the world thing, or buying a property or whatever, great news.
Absolutely great news. I think it's another thing for our listeners to think about. And we're not recommending anything. Make it absolutely clear.
Yeah.
We're saying that, look, there's some returns to be made out in the market. There are some big risks. It depends on your appetite for risk and whether this is right for you. But I think Matt seems a very interesting chap, and I'm just fascinated to know how these sorts of things work as much as anything, Graham.
Yeah, he's given us a good insight into that, and I think there's there's obviously a lot more an investor has to do. You've got to do your own due diligence and pick up the phone and speak to Matt and ask the questions that are on your mind. Do the research. At the end of the day, we're a podcast. We're not financial advisors, but we bring to you people every now and again who have got investment opportunities. And it's up to you to make your own minds up. But, on this one, it's got the prospect of just happening in the background, without much of your involvement. And, you potentially could do quite well. So, Kevin, it's been another interesting investment type podcast that we've done here on the next 100 days. And today, well, I've been Graham Arrowsmith.
I've been Kevin Appleby. Goodbye.
Goodbye.